Hello, welcome to Baltic World, the premier channel discussing news and important issues facing Northern, Central and Eastern Europe. My name is Crispin, and right now we're hearing a great deal about inflation, the rapid increase in prices of everyday items such as energy, fuel, food, services and housing, particularly in the United States. But there is a place, regrettably, where it is even worse, and that is the Baltic countries. It's got by far the worst inflation rate in Europe. Energy, of course, is driving that increase, but also real estate. So what I'll do is I'll give an overview of what's happening there, who it's affecting, what the causes are, and my analysis of where things are going and the underlying reasons why. So I have some articles to go through. If you find value in this discussion, please like and subscribe. You can support us on Patreon if you like. Let's get into it. The first article I have is from Euractiv.com by Pekka Vantinen. It's from last month, but it's got some good statistics. And it says Baltic states top Eurozone's monthly inflation table. Estonia, Latvia and Lithuania currently have the highest monthly inflation rates in the euro area, latest Eurostat estimates show. Estonia ranked first in the euro area with a 12% inflation rate for December. The other two countries topping the list were Lithuania with a 10.7% inflation rate and Latvia with 7.7%. The only two countries with an inflation rate below 3% in December were Malta with 2.6% and Portugal with 2.8%, followed by Finland with 3.2% and Austria with 3.8%. Providing a longer-term perspective is the annual inflation rate, which for December 2021 amounted to 5% compared to December of last year. That's the entire euro area. I know that Germany hit the average basically with a 5.1% inflation rate over that period. But you can see that the Baltic states are absolute outliers. The single biggest driver of increased inflation has been energy, a walloping 28.6% increase in energy prices over the past year, according to Eurostat. That has drastic flow-on effects for the rest of the economy, particularly in those areas of essential services. So, for example, in unprocessed foods, that's increased by over 5%, no doubt in part, large part, due to freight costs, the cost of moving goods that are produced to market and all of the processing involved. And the problem with this kind of inflation is it really targets those on the lowest incomes. It's a deeply regressive expense because the highest proportion of their incomes go to these goods and services, and they have the least spending capacity and ability to absorb the increasing prices. Now, when we talk about energy prices and the Baltic, that is beyond the ability of governments in those regions to control. So I have an article here from the New York Times. It's focused on oil, but it's equally applicable to natural gas. It's titled, "Why are oil prices so high and will they stay that way?" Now, scrolling down, it says the pandemic depressed energy prices in 2020, even sending the US benchmark oil price below zero for the first time ever. I recall they're actually paying people to store barrels of oil. But prices have snapped back faster and more than many analysts had expected, in large part because supply has not kept up with demand. Western oil companies, partly under the pressure from investors and environmental activists, are drilling fewer wells than they did before the pandemic to restrain the increase in supply. Industry executives say they are trying not to make the same mistake they made in the past when they pumped too much oil when prices were high, leading to a collapse in prices. Elsewhere, in countries like Ecuador, Kazakhstan and Libya, natural disasters and political turbulence have curbed output in recent months. Quote, "Unplanned outages have flipped what was thought to be a pivot towards surplus to a deep production gap," said Louise Dixon, an oil markets analyst at Rystad Energy, a research and consulting firm. On the demand side, much of the world is learning to cope with a pandemic, and people are eager to shop and make other trips. Wary of coming into contact with an infectious virus, many are choosing to drive rather than take public transportation. But the most immediate and critical factor is geopolitical. A potential Russian invasion has, quote, "the oil market on edge," said Ben Cahill, a senior fellow at the Center for Strategic and International Studies in Washington. In a tight market, any significant disruptions could send prices well above $100 a barrel, Mr. Cahill wrote in a report this week. Russia produces 10 million barrels of oil a day, or roughly 1 of every 10 barrels used around the world on any given day. Americans would not be directly hurt in a significant way if Russian exports stopped. Baltic countries would, because the country sends only about 700,000 barrels a day to the United States. That relatively modest amount could easily be replaced with oil from Canada or other countries. We'll leave it there. Of course, one of the reasons why Russia is doing its aggression towards Ukraine right now is because we're in a deep winter in Europe, a significant dependence on Russian gas in Europe, and the belief that if Russia was to invade the Ukraine, the sanctions being imposed on Russia would be mitigated by the dependence that Europe has on Russian gas. Now, there are serious long-term consequences here because the Americans have been adamant that there will be severe and long-lasting economic pain for Russia should it invade Ukraine. At the top of that list is the Nord Stream 2 pipeline. They came out publicly and said, if Russia invades Ukraine, one way or another, I'm quoting that, one way or another, gas will not be pumping through Nord Stream 2. Now, this is, of course, would be music to the ears of the Baltic countries who have a deep fear of Russia, but one of the adverse consequences is an enduring high energy price, particularly when it comes to gas and the fears in the market of disruption. But then we get into the issues that are specific to the Baltic, and that is the overheating real estate market. The European Central Bank is deeply concerned about the rapidly increase in housing prices in that area, particularly in the capital cities, so Tallin, Riga, and Vilnius. Vilnius housing prices have increased by 12.2% year on year as of December 2021. So we are seeing an absolute explosion in the price of housing in those areas, and it has this deep hallowing fear and anxiety because the Baltic countries were heavily impacted by the housing crunch of 2008 and 2009, and many people are wondering whether or not there's a repeat. So what's my opinion of this? Is this a boom or a bubble? And the picture here is mixed and nuanced. For example, the pandemic has actually created a dramatic change in human behavior in the workplace across the board. Until the pandemic, people wanted to live as close to the city as possible in the major metropolises around the world because they had a commute between themselves and their workplace, and they put a premium on shrinking that commute to the shortest time possible. Most people being comfortable with a journey of up to 30 minutes each way to their workplaces and back to home on any given work day. But one of the things that the pandemic did was dramatically accelerate and expand the proportion of the workforce that worked remotely. People were encouraged to work from home. Businesses changed their operations. You had all these digital nomads floating about. People who would live in an area that was affordable didn't need to commute to the inner city areas and therefore would invest in the housing market closer to where they are in the suburbs, knowing that they could still actually work each day because they didn't have to go on a workplace commute. Now, globally, this seems to have had an interesting effect on housing prices. The major metropolises, Manhattan, Los Angeles, their inner city areas, they have had a decrease in home values because people no longer want to spend the millions and millions of dollars to be close to their high-flying workplaces when they can actually work out in the suburbs. Meanwhile, and this is quite ironic, the second-tier cities, the smaller metropolitan areas, those that have all the services and lifestyle and facilities of an urban area, but without the crazy hustle and bustle and their massively inflated house prices, well, they have experienced strong growth across the world, which would in part explain Tallinn and Vilnius, because these are beautiful urban areas. They have all the facilities necessary for someone to work in a digital space. They have some of the fastest internet speeds on Earth, but they don't have the crazy hustle and bustle of a major metropolis. They don't have that global profile. And what's happening there? Well, younger people who are tech savvy and earning a more than higher average income, well, they actually do want to live in the urban areas, even though they don't work close to where they live. In other words, they want the lifestyle of living in an urban area without the commute. And because they're living in a digital economy, because they're working remotely, they're looking to buy property in places where they can have that lifestyle but are affordable for people in their own circumstances. And this also is reflective of some of the government policies that the Baltic countries have. You'll note that Estonia has a world-famous tech sector. They have e-nomad and e-residency visas to encourage people to come and live in Tallinn and Estonia, use Estonia as their base of operations for their online businesses or their freelance work, and as a significant proportion of the global work market moves to that digital space, well, those kinds of visas seem increasingly attractive. That creates an influx of young workers and drives up the local housing market. So is this sustainable? Yes and no. In the yes side of things, it is driven by a migration of young people who want to live in an urban environment and have all the facilities and lifestyle that comes with that, but operate in a digital space, meaning that they have higher incomes, they can generally afford to pay these higher prices, and thus the increase in cost is a reflection of the increase in demand. But there are two major concerns that I have with this. Number one, it's in an environment of a broad-based increase in inflation and prices across the economy, meaning that younger people are paying more for their everyday goods, plus they have a massive mortgage which they then have to service. It is highly likely that they're going to be over leveraged. Now, as we reach the sort of peak of the housing boom, particularly in Tallinn and Vilnius, although Riga has a bit of room to move apparently, that will be a huge amount of pressure in terms of debt burden for these younger people. Combine that with the fact that the debt to earnings ratio of Vilnius and Tallinn has exploded. So for example, to buy a house in Kaunas relative to the local incomes in Kaunas is far more affordable now than to buy a property in Vilnius. Even though they are similar cities, they're not very far apart. They both have international airports. Vilnius is now incredibly expensive relative to the other cities in Lithuania. There's actually a third problem I have, which is overall demand. While these people have moved to those inner city areas and are driving up costs, the overall population of the Baltic states continues to decline. We don't have high birth rates. We don't have exploding young families. And while the migration that is coming into the Baltic countries is attractive in that it's younger people, and this is a good thing, what we're not seeing is permanent residency. We don't see the native population necessarily making up a significant portion of this. We don't see expats, younger people that have perhaps gone to the other parts of Europe to earn a living, rapidly repatriating to drive up these prices. In short, this is not necessarily a sustainable growth. And when we have an overall population decreasing tax base, that is going to be seriously undermining the supply and demand equilibrium for these areas. And then finally is what the central banks are going to have to do in monetary policy to combat the broad brush inflation, particularly in the housing market, and that will be to increase interest rates. So what happened during the pandemic is that the interest rates came basically down to zero, even negative, to encourage the borrowing and spending to drive the economy forward in an environment of deep economic constraint, i.e. Because businesses was closed, there was all this social distancing, all these restrictions. Well, they were encouraging people to borrow money to invest to keep the economy growing. And what's happened is it snapped back stronger and faster than anyone thought possible, particularly in the Baltic states. And so the central banks are going to have to increase interest rates. So what we're seeing is these people taking out enormous loans with huge debt to earnings ratios, generally increasing prices, but also the interest rates on their loans is also going to increase, putting enormous pressure on them to sell. And with a declining overall population, there simply may not be buyers, and we might end up in a bubble and collapse. That could be a real risk. But it is a different picture to 2008, 2009. in the sense that it's not the same lending practices. The ability of these younger people to repay is slightly more regulated, easier to assess, and also the fact that there is a changing way in which people live and how they prioritize where they live. And in some respects, the increasing prices in Tallinn and Vilnius and Riga is in part reflects the changing demographic and the way people choose to live in the post-pandemic world. That's my view on the inflation. Things could get much worse if Russia invades the Ukraine in the coming weeks. We will know more about that soon. But what do you guys think of the rising costs of housing and everyday goods? Is the housing market now inaccessible for younger people in the local areas? Is it too expensive to rent properties and buy properties in Vilnius and Tallin? Are we seeing savings being rapidly eroded by these increasing prices? Are older people that perhaps have a modest retirement falling into poverty because they can no longer afford everyday goods and services? What impact, if you're from that area, is the increasing prices having on how you plan for the future, how you live and make ends meet week to week? These things are very serious, and I wonder what the European central banks can do to help the Baltic states in particular, whose inflation is far beyond even the high levels that are experienced in other parts of the European Union. Thank you so much for listening to this. I will definitely cover the economies of these regions in the future. If you find value in these discussions, again, hit that like button and subscribe, and I'll see you next time. Goodbye.